Earlier today, not one, but three major headlines came out that I believe investors need to know about. If this is your first time tuning in, my name is Daniel. You're watching Unrivaled Investing. Let's dive straight into the news, where here it is. You see President Joe Biden saying, for God's sakes, this man cannot remain in power. Of course, he's talking about President Vladimir Putin of Russia. Later on, the White House backpedaled, saying the president's point was that Putin cannot be allowed to exercise power over his neighbors or the region. Later saying he was not discussing Putin's power in Russia or regime change. No matter how you look at this, in my opinion, it's an extremely dangerous gaffe. It's a mistake to say something like this, especially when you're talking about a world power that has hundreds of nukes that can cause just unimaginable destruction. And so I just think you're further pushing a madman in a corner, and it concerns me to think about what type of retaliatory action you could see, whether or not it's from an economic or humanitarian aspect. So very concerning to think about that. And this is arguably just one of three headlines just from the last few hours that I think investors should be aware of. This one has real significant potential impacts on the stock market, where President Biden, the White House, is expected to reveal a 20% tax aimed at billionaires, including unrealized gains. Is supposed to come out on Monday. So this proposal of a 20% tax rate that would hit both the income and unrealized capital gains of U.S. households worth more than $100 million, so not the $1 billion tax, but over $100 million households. And so this is worthwhile to take a step back and ask yourself something. I think it's worthwhile to do these sort of thought exercises. So let's pretend for a second that taxing unrealized gains, so the stock price moved up and therefore a billionaire will need to sell his or her shares, push down the stock price, create a whole new dynamic where billionaires might consider leaving the country or just try to find loopholes, like having illiquid entities that they don't have to sell own the stock versus them. Let's consider and just pretend, pie in the sky, that this is a good idea, that this works. I obviously don't think it's a good idea. I think it's a terrible idea. But let's imagine that this idea works. Well, what they're penciling out, keep in mind, this is what they're saying they think they can do, is that this will generate $360 billion in new revenue over 10 years. So over 10 years, it'll generate $360 billion in new revenue. Now, I think I understand why there are these initiatives, desires to raise revenue, especially when you have huge deficit spending. But there's a much bigger elephant in the room that investors need to be paying attention to, which is the U.S. debt. The U.S. debt's around $30 trillion. A 1% change in the cost on that debt is that $300 billion. Versus that $360 billion that they might raise by screwing up a whole system that's worked for decades, created huge amounts of wealth, literally trillions of dollars of wealth. Here it is. Let's screw around with that pie with the possibility of raising enough that really won't even cover a 1% change in interest, because that's $360 billion over 10 years versus a 1% change, which would be every year. So I think what you're really talking about here is that there's a bigger problem that needs to be addressed, which is deficit spending and bring down the debt. And there are going to be these initiatives to try to fix it. And so far, you're sort of just picking at scraps here, and you're not really solving the core problem. And look, as I already was talking about, I think it's a terrible idea, can lead to huge unexpected consequences, arguably some of which is having the best and most successful entrepreneurs say, hey, why would I want to do business in the U.S. when you have, types of policies like that? The third headline, which is, am I reading the funny papers here? I mean, you see Senator Bernie Sanders proposing a 95% corporate tax rate. I mean, this is like one headline is more ridiculous after the next. This is all from today, saying, look, this will only apply for the next 3 years. It would be 75% tax, but up to 95% for some of the largest companies, JP Morgan, Chevron Group. I'm speechless. Like it's just sort of shocking to me to see one headline after another. Like it's mind blowing to me. Like, do they not have any understanding of second order effects? Like, it's great to say like, oh yeah, raise more money now. Okay, great. And then what? You always got to ask, and then what? And thinking about this, like, do you think not even any major entrepreneur, think about all the future entrepreneurs. If they were to see this and say, oh, all the successes, yeah, they got bent over and they ultimately got taxed at 95%. Why would I want to start a business in the U.S.? This could have huge secondary effects. Just think about it. Yeah, it might have a short-term revenue benefit, but the long-term, you'd be screwing yourself over. So I just look at this one, headline after another, and honestly, it's making me think of this other, major idea. And here it is. This is sort of a crossover with science fiction. I'm a big fan of science fiction, where, you have Harry Seldon in the Foundation series. And, if you're not familiar with it, the whole premise with this character was that, this is supposed to be, like effectively a far futuristic, sort of space opera type of series, where you had one man sort of say, hey, I can see how the empire falls. And he sees the different components and how it spreads out over a really long time period. And I'm not talking about sort of the psychobabble that you have in Foundation about how one man could do it. But I'd argue what Ray Dalio's calling out here is so similar, in my opinion, to some of these headlines and just data points that you see. And look, I'm not trying to say Ray Dalio is a prophet or anything like that, but the framework that he provides for investors and people, any citizens, politicians around the world to consider, I think is just really, really important to consider. Like, what you're effectively seeing when you see actions like Senator Bernie Sanders proposing a 95% tax rate, when you see the taxing of unrealized gains, a horrendous idea. Does that mean, by the way, that you get the tax refund when the stock drops significantly? Which could easily happen. And so, or if you go below the $100 million threshold, you can't claw back that money. And so I look at this, and this is just like straight out of his books, his videos, where he's like, look, when you get into this late stage, super debt cycle, you get these problems where you effectively have overly leveraged society trying to figure out how to make ends meet. The first thing is you look at this huge disconnect between how most of society does not have a lot of wealth, and then you look at the percentage of society that does. And so you say, hey, how do I soak the rich to sort of fix this problem? And you look at over time, and like, that doesn't work. You're going to try to, you're good. There's going to be some sort of political, social revolution. But at the end of the day, soaking the rich, it doesn't really solve the problem. It doesn't solve the fact that you still have this monumental debt load that needs to get solved. And so then you try cutting expenses. The problem is that leads to even bigger problems. And so, because ultimately cutting a government's expenses also impacts someone else's income, and that person's income then gets cut. So it sort of makes the whole economy worse. Now, arguably, if you have a hot economy, that is the time where the government should be taking their foot off the pedal, not running deficit, because they're saying, hey, the economy can handle it right now. Let's take our foot off the pedal, which you should be seeing, arguably. So then you sort of reach this point. This once again, this is sort of the framework that he talked about. You're going to see, politicians proposing crazy ideas, political revolution, and you're starting to see the data points here. So then the next is you're going to have some sort of max pain when everyone's sort of struggling with these things. Interest rates are going up, and once again, that 1% interest on $30 trillion is way more than these ridiculous plans. And so you really need to say, like, okay, well, we can't default on it. And so then the last one's printing money. And so until you sort of have that, you're going to go through this crazy dance, and you're going to see all these things. And as, Ray Dalio's called out before, you see it time and again. And so I guess this also ties back into my last video, because I've done 2 videos this week. And look, I want to be an optimistic person, optimistic realist, because there is a lot to be optimistic about. Like the amount of inventions, like I am personally a believer in this singularity. I think it could be amazing in the coming decades. The possibility of AGI and that type of stuff, I think it's really, really exciting. Immense possibilities. But I think, as I've called out in a couple of videos lately, I am, I've raised a little bit of my cash balance because of some of my concerns. Now, look, some people might say, oh, Daniel, you're trying to time the market. This is not trying to time the market, folks. That's the part that I think people are missing, is that when you see headlines like this, you see core data points like this, you have a framework like what Ray Dalio is talking about, like, oh, you have these big debt cycles, and this is the natural policies that people have until you ultimately effectively inflate your way through it. understanding that, what I'm saying is I don't feel like I'm getting compensated for most stocks. I feel like most stocks aren't compensating me for the risks that I'm calling out here. The risks of political types revolution, one of which could be like a 95% tax rate. I mean, that's a perfect example. Like, that should impact equity prices, even though it's a very, very low risk. A retaliatory response from President Putin, that should impact equity prices. You know, seeing the thought process that you might have major founders of major companies unloading stocks at a huge clip in the future if this were to gain traction. Even if each of these are very low probabilities, that should impact how one considers valuations. And that's arguably what I'm talking about here. I am not trying to market time. What I'm saying is I want good deals. And what I'm saying is, for the most part, the deals I'm getting are good, but not great. And I honestly want to be, when I'm fully invested, I would be fully invested today if I was like, oh yeah, there's a bunch of stuff here that has 200 to 300% upside. Easily, even in a recessionary scenario, I think there's 200 to 300% upside, then I'd be fully invested. But when I'm looking at all these data points, I'm saying I'm not being compensated for this. So this is not me trying to time the market. This is me saying I just don't think the value's that great. So instead, I'd rather hold cash. And so I think these headlines are worth understanding, are worth considering, and recognizing that you're going to see more of these funny paper type headlines when we're in the environment that we're in. And I think, unfortunately or fortunately, however you want to frame it, you have the modern day Harry Seldon, Ray Dalio, effectively saying, yeah, here's the framework. This is how it's played out. You can look at it over the last several hundred years. It plays out over and over again. This is the framework, and this is how you should understand it. So if this video has been helpful for you, please make a point of hitting that thumbs up, hit that subscribe button. Thanks so much for tuning in.